Yesterday, stock ticker symbol DRUG went up over 2,200%. And yes, the stock was on the runner scanner, so the runner strategy did buy it, and it made the whole year. Then immediately after market close, I log into X and I post this. When you get a move like DRUG, the small cap market opens up. If there's ever a day to watch for large upside momentum in low float runners, it's tomorrow. So fast forward to today, and I go ahead and write a post about how stock ticker symbol STEC is getting a large move up. My pre-market strategy ends up taking a trade on STEC, and on a $1,000 position ends up making $460. Now, would you be mad about that? Of course not. It's a 46% profit. That's pretty amazing. But then, in continuing to post live what stocks were moving this morning, I post about ATNF. And then I keep posting about ATNF. I keep posting about ATNF. I keep posting about ATNF. This thing ends up going to the freaking moon, and the strategy ends up making on just a $1,000 position over $4,200. So in this video, we are going to cover the pre-market strategy. We are going to cover the runner's strategy that crushed drug yesterday. Then at the end, we are going to have a larger, very important conversation about how to know when to employ these types of strategies, as that's the key point to understand here. So let's go ahead and start with the runner's scanner, which on just a $5,000 position yesterday ended up profiting over $64,000. I mean, that's a year maker. That's a salary right there. Insane move. And don't get your hopes like too high. I don't want to get anybody like too, oh my God, look at how great this is. You don't get 2,200% movers every single day, right? The point of this strategy, though, is that when you do, you capitalize on it. And no matter what happened basically now for the rest of your trading year, as long as you manage your risk, if you catch 1 or 2 or 3 of these a year, which I promise you 3 of these a year do happen, at least on average, you are solid. You're good to go, right? So first off, just before anybody thinks that I just created this because holy hell, look at this really strong stock, it was already on the scanner yesterday. It was on the scanner yesterday because the day prior was actually a huge move as well. It went from being a $1 stock to a $2.50 stock. It had a huge move the day before. It went absolutely ballistic. So it was already on the runner's scanner, therefore it entered this trade. This strategy is set up to only enter trades that also meet the scanner requirements. So what are those scanner requirements? I'm glad you asked. First off, the percent change based off of the open of the candle. You don't want to base it off of the default close of the candle, else all day your scan results will be updating, which you don't want. The whole point here is that you have the same list of stocks from market open until market close, so that you know that the stock was on the scanner before market open, right? Drug didn't enter the scanner like here when it was already up 1,000% or anything like that. No, drug was on the scanner right at market open because we use the percent change based off of the open of the candle is greater than 30. So basically, is today opening 30% higher than it opened 14 days ago, as that's the default length parameter in percent change. Next, we look at, was the volume yesterday greater than 5 million, or is the average volume over the last 14 days greater than 5 million? So basically, we don't want to get stuck in any low liquidity crap stocks. Are you trading really high volume? That's the second study filter. Finally, was the high from yesterday greater than the highest high out of the last 10 bars based off of the value offset 2 bars ago? So was yesterday's high breaking recent highs. If we go back and look at our drug daily chart here, let me zoom in and let me move my mug out of the way. We, of course, will see, well, let me turn on percent change. I think it's pretty obvious. It did like 100% that day. But yes, the percent change on this day, based off of the open instead of the close, because that's very important, on this day is 113%. This bar opened 113% greater than it did 14 days ago because the day prior had such a huge day. That condition is met. Also, this day traded 21.5 million shares of volume. That volume condition is met, and then obviously this day was higher than the highest point out of the 10 days prior to it. So because of this huge volume moving day, drug was on the runner's scanner. Let me actually go ahead and load up my runner scanner. Oh, perfect. I already have it here. Let me change this to red as I click through here. Let me show you some of the stocks appearing on the scanner today. OKLO, percent change going into today, 50%. Great. Yesterday, we traded 37 million shares, and this stock just averages over 5 million anyway. Volume, great. This day broke above its high, is higher than the highest point of any of the bars before it. It was breaking over local highs. Good. If we look at DJT, yesterday, breaking over local highs on heavy volume, and coming into today, the percent change open up 113%. Let's go look at IONQ one more. Yesterday, high broke over local highs, trading just on average over more than 5 million shares. The percent change at open today, 37%. Do you see what this scanner is doing? It is returning stocks that are strong on their daily charts. And the strategy that we've built utilizing this scanner is built around the idea that if the chart is strong on the daily, it is more likely than not to continue today. So we run the runner strategy on the 5-minute chart, which looks to capture this continuation. I don't think I've ever given this scanner away, but since I'm so fired up about how yesterday and today have gone for me, I'm going to go ahead and give you my runner's day trading scanner. So I'm on my website, daytradingstrategies.net, which you can access from the link in the description down below if you would like to get access to all of these scanners and strategies and indicators, etc. But clicking into the runner scanner, you're going to get a share link here. All you're going to do is copy this link, which, by the way, I will also have pasted in the description of this video. You're going to hop back into your ThinkorSwim, go to Setup, Open Shared Item, paste that link in, Preview, and Imports. Now, when you do this, for some reason, ThinkorSwim pops up this gross little modal here. I don't know why it does that. You can come into your scan tab, go into your middle hamburger drop down here, and you will load in what is called the DTS Runners Day Trading Scanner, and you will have this exact scan on your chart. You, of course, can do that same process for any of the other scanners, strategies, or studies located on my website. There are right now over 70 different codes you get access to. So once again, daytradingstrategies.net. Click that link in the description down below as well and sign up to become a better trader today. So let's talk about entrance condition for the strategy. First off, I'm trading on the 5-minute chart. That is the intraday time frame that I have tested this strategy against. The first condition for the entrance is everything we just mentioned on the scanner. Is yesterday breaking above local highs on heavy volume, and is today's percent change open 30% or greater? That is very important. It might sound obvious, but when building strategies, you need to make sure that your entrance condition is exactly aligned with the scanner you'll build. Else you'll get false positives of stocks that were amazing trades, but they would have never appeared on your scanner. Or stocks that appear on your scanner and were really strong, but your strategy wouldn't have actually taken that trade. So you need to make sure when building strategies that your strategy and scanner are perfectly in sync on their entrance condition so that you don't get those false positives and false negatives and ruin your back test, right? Second condition for entrance, current bar close must be above today's open. That's what this cyan line plotted on the chart represents. Represents today's open. Basically, we must be a green daily candle. And third and final, the RSI value must be greater than 50. So with everything else, hey, make sure it should be appearing on this scanner. Make sure the daily chart is strong. Then make sure the intraday is also showing some strength. Then we get into this thing and look for continuation. Your take profit on this strategy, end of day. When you enter, you hope to hold this trade all day and exit at the close of the final 5-minute candle. That might sound ridiculous. How often do you hear you won't go broke taking a profit? Trey, the stock is up. The stock's up 100%. Why wouldn't you sell? Because of this. This right here is why. You only need a couple of these a year and you are an extremely profitable trader. Yes, are you sometimes going to be up 30, 40% and have the stock come back on you? Yes. Does that suck when it happens? Yes. How do you have the emotional fortitude to get through when that happens? Because sometimes this happens, right? Then they don't always go up 2,200%. If I go back and look at my OKLO, some of the trades, look, this was a really nice day. If it would load in. This right here is a really, really nice day. This is a really nice trade. You get long and you end up making, what do you make? 15% on this day. That's very nice. That's what? That's like $800, $900 trade on a $5,000 position. That's very nice. You're very happy with that. I'm not saying every trade, like you're only either going to make $60,000 or you're going to lose. Of course not. But the $60,000 trades are the ones that you're really looking for. Those are the ones that really, holy hell, make this strategy pop. Now, let's also talk stop loss because, of course, every single time the stock does not fly like this, right? Actually, on this day where you end up making the 15% trade on OKLO, you actually eat a bit of a loss beforehand. The stock is green, going up above its daily open. The RSI is high. You buy, and this is one of those instances where you buy, you get a 4% pop, which 4% in the kind of stocks we're trading here is not that crazy when this comes back against you. I promise you there are crazier cases. But anyway, when this comes back against you, you end up getting stopped out simply when the RSI value closes below 40. That's it. Really easy stop loss. And I should actually clarify here, this isn't always a stop loss, right? Using the RSI indicator as a reason for stop exit acts as a trailing stop as well. Right? You end up getting long on this day as well on OKLO. You get a really nice, pretty immediate 10% pop. Then unfortunately, the stock starts to fade on you. When the RSI over there closes below 40, you end up getting stopped out of this trade. But because you were in it for so long and it was so strong for so long, when the RSI comes down below 40, you've still made 5% in this trade. You still made profit. So it's not always a stop loss. When the stock goes up, that RSI begins to act as a trailing stop as well. Here is an example back test I ran with this strategy. In this instance, the largest win was $15,500. I don't remember exactly when I ran this back test. It was probably years ago. This is one of the first strategies I ever made. But the important part to note here, it only has a win percentage of 38%. Which you can maybe guess. Maybe the whole time you've been listening to the strategy, it's like, Trey, you're chasing the hell out of these stocks. How does this make money? You're right. We are chasing these stocks. And that's exactly why you have to let your winners run. It's exactly why when drug ends up popping up here, let me change my screen. When drug ends up doing this, you can't take your profit at 100%, right? Like you probably want to when this stock immediately rockets up. You probably will have the desire in your head, holy crap, I should sell this thing at $10. No, this whole strategy, you have to let your winners run. Remember that old adage I spoke of earlier, you never go broke taking a profit? Yes, you do. Because if you sell your winners too early on a strategy like this, you will not make money over time. This strategy makes money on a 38% win rate because when it wins, it crushes, right? It can have such huge winners, and it only takes a handful of those huge winners a year to make this strategy extremely profitable. So just note if you want to move forward with something like this. First off, don't just do it because you heard me talk about it. Go run your own testing. Very important. Don't ever start trading a strategy with real money just because you hear me or anybody else talk about it. But second, you have to have the emotional fortitude that you are going to hold on to winners no matter what, even if after you buy, they immediately jump up 500%. What are you going to do when you buy a stock and it immediately jumps up 500%? Are you going to sell it? In this case, in this instance, you have to bring yourself to not to. You have to capture the 1,500% that ends up happening in this instance because you're going to lose most of the trades you take. Most of your days are going to be red days, but a couple of these and you've had yourself a damn good year. That's the runner strategy. Now let's talk on the pre-market strategy and scanner. The scanner is really easy. I have it set up so that any stock up more than 2% in after hours trading appears on the scanner. I then have a custom column built that shows me what stocks on that scanner are currently the strongest. So like all morning today, ATNF, of course, sat at the top of that scanner, and it did right away when it spiked here too. If you remember back to the beginning of this video, when I showed my first ATNF tweet, that was here. Before the strategy had even entered yet, I was already posting about that stock because it was the number one on my scanner. I'm not going to take any more time to talk about the pre-market scanner because I literally just made a video where we created this scanner step by step. I'll put it in the card in the top right now. If you want to click on that, it'll open the video in a new tab. Watch it after this video so that you can build that scanner in your ThinkorSwim yourself. Now, let's talk about the strategy itself. First off, we are once again trading the 5-minute intraday chart. Now, there is some real complexity in this strategy code that I won't bore you with, but we have to make sure that we are only seeing trades that are entering when we can enter. Pre-market actually opens at 4 a.m., but Charles Schwab Treyding, which of course the brokerage ThinkorSwim is built on, only allows trading to start at 7 a.m. So that, of course, is the first case that must be true in order for an entrance to be true. It must be 7 a.m. or later. Now stick with me here because there's a handful of specific conditions for this pre-market entrance, the first of which being volume. That is how we denote, hey, this stock probably just got some news. This stock is getting an injection of demand, which is likely to lead to bullish continuation. The first check we do for volume is that the current volume bar is higher than the highest volume out of the last 10 bars. So basically current volume is breaking over recent volume highs. And next, and a fun bit I've got here, is that it is at least 5 times greater than the amount of shares you are looking to buy. So from this strategy itself, you can easily change your position size from the inputs settings on the strategy, and your size will be decided by that position size divided by the price you're buying at, right? So in this instance, we're taking a $1,000 position. The close of this candle is $2.63. I guess when you divide $2.63 into $1,000, you get 380 shares. That means that the strategy will also check before it enters, hey, did we trade at least 5 times 380 shares on the previous candle? On a stock at this price and that small of a position size, that's only something like just less than 2,000 shares, right? Which of course, we got 81,000 shares of volume here, so that's also true. Next, we have to quantify that we are getting a decent sized green candle as well. In my codified strategy, the way that I did this is that the current bar that we're looking to buy on must be greater than the average true range value of the previous bar. So in this instance, the average true range value, as you'll see, little number here, is only 3 cents. So basically, this just has to be a 3-cent green candle, because obviously the stock wasn't really doing anything for the bars prior to when this volume injection came in. But that's just how I quantify, hey, we're getting a decent sized green move versus the way that this thing normally trades. And last but not least, the bar we're buying must be greater than yesterday's close. So yesterday's close was something like one. You know what? I should plot this. Be right back. I'm going to plot this within the code. There, that value is now plotted on our chart. Yesterday's close was 152. So as we zoom in here and look at today, you see that's just an added easy visual for, hey, should we be entering this candle? I'll update the code on the website with this new plot as well. So maybe obviously at this point, as you've been looking at this trade for a few minutes now, the end goal take profit of this strategy is to sell into market open. You sell the close of the 5-minute candle into 9:30. But remember, there was another trade we took this morning that we haven't even really talked about that much because, we only made 45% in it. We've been talking about some crazy winners these last 2 days. This trade on STEC, we got in because of the volume spike at 7 a.m. And I need to correct myself here. I apologize. I said earlier that the volume either needs to be above the highest point of the last 10 bars and 5 times greater than your buying power. It's actually or 5 times greater than your buying power. So either the volume is breaking out over recent highs, in this case it's not, or it trades 5x the amount that you would like to buy. So we bought 518 shares here. This trades 442,000. That is quite obviously 5x 518. So the strategy gets long. So just a little operator fix there. Instead of and, it is or on your volume checks. Anyway, we end up selling this stock here for profit at 8:40 a.m., well before market open, because the close of this candle closes below the lowest point of the last 5 candles. So looking back here, 1, 2, 3, 4, 5, the lowest point of the last 5 candles being here. We close below that. We exit the trade for profit. And of course, let's be honest with ourselves here. We know they're not all going to work when covering strategies like this with you all. I'm always sure to cover the loss effects as well. Our exit for stop loss is that we sell the first candle to close below previous candle low. So in the previous example, we waited until the closing price closed below the lowest point in the last 5 candles. That's because we were green on the position. If we're red on the position, we sell the first candle to close below the low of previous candle. You notice here, if not, we'd be waiting until 1, 2, 3, 4, 5. We'd be waiting until this low all the way down here to sell. Instead, we want to get out faster when losing. Hold on to your winners, get out of your losers quickly. Now, when do you apply this strategy? That's where real profitability becomes to come in. When you understand your strategy so well, you know what market conditions they work the best in. I'll be honest with you, I hardly ever use this pre-market strategy. I actually find that it doesn't work that well most of the time. But this morning, I applied it because, remember, all the way back to the beginning of this video, what did I post on Twitter or X, whatever, last night? I posted that since drug did that 2,200% run, that I expect the small cap market to be very hot today. When a stock has a massive run like this, it does 2 things. It scares the short sellers out of shorting the front side of the move. Normally, if a small float stock pops up 500%, short sellers attack it because 90% of the time they do fail and those shorts will make money. But it just takes one like this to blow up a lot of those shorts, then to scare out, obviously, them as they're not in the game anymore, and all their friends from attacking the ones tomorrow as tightly. So when ATNF here does its initial, immediate 155% pop up, it's not as heavily shorted as it would have been yesterday. And two, bulls, longs that saw this move also think, hey, holy crap, we just saw a stock go up 2,200%. They are much more likely to chase a stock up 150% than they were the day before because they just saw what happened yesterday. So whenever you get a 1,000+% runner, which once again will happen a few times a year, it seems insane. I mean, it is insane, but these things happen. 2,200, I've seen 35, 4, 5,000% runners in my 9 years of trading. They happen. When a day like that happens, that is when I activate this pre-market strategy. That is when I want to be looking to take the trades like we took this morning. Now, the runner's strategy. You get a pretty decent list of stocks meeting the runner's criteria every single morning for the most part, especially in hot small cap markets like we're sort of in right now. So how do you decide which stocks on this scanner you want to take stabs at that day? First place I go is FinViz. I type in the ticker of the symbol I would like to potentially trade that day. Then I scroll down and I take a look at its float. If you don't know, float means the number of shares available in the open market to be traded back and forth. AKA, it is the supply of the ticker, of the stock. When you have low supply, it takes less demand to move them. Just basic laws of supply and demand, right? So if the stock on the runner scanner has a very small share float, 2.8 million is micro. That's very, very small. It is more likely to get a huge run as any influx of demand will make this thing fly. As we can see from yesterday, drug traded 102.7 million shares of volume into a 2.8 million share float. There's only 2.8 million shares of this thing available to be traded, and it traded 102.7 million. It rotated its float something like 45 times or something like that. Insane demand into the supply, which obviously makes stocks go crazy. Next, I look at size and volume of previous day relative to the ticker. So this drug stock, even going into yesterday, the day prior was insane. I mean, now that you look at it in relative scale, the day prior looks like nothing. But before the craziness drug did yesterday, 2 days ago, it had a 150% green day on massively increasing volume. That immediately puts this one towards the top of my radar when running a scanner like this. Of course, drug was still at the top of my scanner today because of what the hell it did yesterday, right? But I also loved OKLO coming into today because yesterday, not only did it have a large green day on its price, I mean, it maxed out up 25% yesterday, but look at that volume spike as well. It got a large increase in volume yesterday relative to what it normally trades. I really liked this stock going into today, and as you can see, having itself a hell of a continuation follow-through type day today as well, currently sitting up 38.5%. And I could sit here and I could keep describing perfect world examples in which I guarantee you're going to make it, but the truth of the matter of it is the runner scanner is not quite as specific as the pre-market scanner for, hey, when to turn it on and when to be aggressive. The way I go about it, I like to trade up to $25,000 a day in positions on a strategy like this. That's just the sizing I am willing to put into this strategy. You'd have to decide that for yourself. But what I do is the day prior or the morning of, depending on how I'm feeling, I will pick 4 or 5 stocks that I like that have lowish float and a huge previous move yesterday that are appearing on the scan results. And I will spread that buying power across them. So I tend to put $5,000 of this strategy into 5 stocks every single day. Just sort of sprinkle it around, right? Catch all that you can. Because really, once again, if you can just get one of those 5 to win in a day, you typically end up making money that day because hopefully that one has won much more than the others have lost. Hit like if you learned something, subscribe if you'd like to learn more, and if you think that these strategies and scanners that I covered with you today can help you make an extra $25 a month, then signing up to my website is positive ROI for you. It's $25 a month right now. I'm actually raising it to $35 a month soon, which still very cheap for what you're getting, but go lock in the $25 a month. Link in the description down below. With all that being said, I'll catch you all in the next one. I started my business a year ago with 6 codes for $25 a month with the promise that I would continuously add new codes. As of today, there are now 70 different codes on my website. So I think it's fair to the business that we raise prices, but only for new members. Anyone who's signed up to the site in this first year or so, I will consider legacy members and I will never raise your prices. So if you've ever even considered that you might want to sign up and get access to these codes, do it now so that you can lock in $25 a month for life before prices start going up soon.